Welcome, everybody. This is Axel Merk, President and Chief Investment Officer of Merk Investments. Nick is giving us a treat this week. He has prepared what is hopefully a new one in a series, a currency chart book. And we're talking about the G10, the major currencies. This is a very long chart book. We have, if you scroll here on the thumbnails, over 60 pages for you. And what it is, it's really a chart book. And I'm going to keep my commentary fairly brief because I really would like to encourage you to download the PDF at merkinvestments.com/research and study these charts. We got everything from a long-term price chart talking about trends. Then purchasing power parity, that's a theory about prices reverting to what the purchasing power parity ought to be. Think of the Big Mac index, that it should cost the same in every country. Talk about how the carry trade, probably the best known currency strategy there is looking compared to the US dollar in each one of these currencies. Then a chart that I particularly like is the what's priced in chart. This refers to what the market believes where interest rates will be, in this case, in a year from today. And then obviously you can think about whether different interest rate differential or interest rates will be, this is not the differential, where the interest rate will be, and based on that, make an assumption about where the currency may move. And then here, talking about the interest rate differential, about the 10-year, several, not all currencies, but several currencies are quite sensitive how the difference in the 10-year yield works. Then difference on the terms of trade is another way to look at currencies. This tends to be more applicable to commodity-based currencies, such as the Australian dollar we see here. And many of you are familiar with the CFTC positioning charts, how speculators are positioned. The CFTC publishes that every week with some delay. And then we have that for each currency. So I don't really want to spend too much time going into each one of these currencies right now, because really you want to absorb this, dig into this as you believe you want to do this, and then you can put that into context of everything else we discussed. So this is really the first foray in trying to bring you some of the currency work we do into more detail. The Australian dollar has been a little bit less in favor. I'm not going to give you my take on each currency here right now. I'm just going to go through here. So not too surprisingly, for example, here the quote-unquote carry looks quite negative for the euro right now. Indeed, the euro has become a quote-unquote funding currency. I've said it sometimes. And what that means basically is that you borrow in euros and you buy another currency, and the reason is it's quote-unquote cheap. There's a negative carry versus the dollar. Indeed, the dollar is a very high-yielding currency right now, which also means that many of the notions that people have are a little bit upside down. So historically, people think that in the crisis, there's a flight to the dollar. Well, that happens sometimes, but you may have noticed in recent months or even years now that more often than not, sometimes the euro actually rallies in risk-off days, and that is because of that negative carry, at least I would allege it is. Here, by the way, we have negative interest rates here in the Eurozone. Sterling is, of course, interesting. There's several charts we don't show here. There's a gazillion of charts we could show you about real interest rates and whatnot, which are quite negative in the UK. That said, here in the Bank of England, the official bank rate here currently, there's a hike priced in. Obviously, that all bets off the table depending on how Brexit is going to go. And so you can go through this. Some of these things you might want to look at also the scaling on the side, because the obviously some currencies are the yen here. Yeah, that's what I'm referring to. What is priced in? So there is a expectation of a minuscule change in changes of interest rates in a year from now. So that's, of course, very different from what you see in other countries. And let me just see whether I point to anything else here. I wanted to show you the Swedish krona if we have it. Here we go. The Swedish krona has been kind of in this channel here. The Swedes are quite concerned about the exchange rate, often talk about the exchange rate. The Swedes, with that I mean the Swedish Riksbank, the central bank there. of late, they have been talking that they want their currency to appreciate, and also that they want to have higher rates. And sure enough, the market is pricing some of that in. Yeah, and then of course we got the dollar here. Since we had shown everything relative to the dollar, there is the quote-unquote speculative positions here in the CFTC chart. And again, as always, the blue text is from Nick. Read the disclosure, please. Again, this is the first time we're showing this chart. That's why I flipped to these very quickly, because I'm not going to spend 5 hours here explaining to you each chart in detail. Really would like to get a taste from you whether these charts are helpful. And this time around, we make these available for free. We do think this is more for the researcher or reader or listener, so to speak, who wants to have a more in-depth look. And so we will make those available in the future, most likely behind our paywall. So we encourage you to become a subscriber to be informed in the loop when we make those available. And yes, again, please give us feedback. Thanks then. Bye-bye.